Hi, everyone. Today we're going to be talking about how the Helix Transition Fund delivers uncorrelated high returns. What strategy do we use? What is our fundamental thesis? And how it has worked over the last 8 to 9 months. I'm going to be talking through um, how the various trading signals work, how the thesis has evolved over time, and also about uh, the sort of returns that we have been able to deliver over the last few months. The last few months have been pretty much, I would say, quite turbulent. There have been a number of market-related changes, a new administration in the US. There have been several policy related changes. We have seen more policy related changes in a few days than what we have seen in maybe years, right? So obviously staying resilient in this sort of a situation is very, very crucial. So we gathered today to kind of understand this compelling investment opportunity. It's designed to navigate the complexities of the current market landscape and to deliver uncorrelated returns. So first of all, we'll be looking at the underlying thesis, which is based on ecoeconomics. The books that I've written, there are two books, Ecoeconomics and Ecoeconomics 2, the two books that are available on Amazon and on various other bookstores. So you can read the book and you can follow pretty much the underlying thesis yourself. We also publish our trading signals. Our trading signals are very closely aligned to, I would say, the macroeconomic events that are taking place, the various earnings releases, dividends that come up. So it's quite related to that, and also various price movements that take place on a sort of day-to-day basis. So our agenda today will encompass comprehensive overview of the fund, exploration of the underlying ecoeconomics thesis, and the significant role of this aspirations gap. This aspirations gap is pretty much the context in my second book, Ecoeconomics 2, where uh, there is fundamentally one side is that younger people aspire to live a digitally interconnected, sustainable sort of life. But the market around them, the infrastructure around them is unable to deliver. So whenever they see opportunities to get what they aspire, they are often okay to spend more with respect to that aspiration being met. You will see that in the workplace, you will see that in investing, you'll see that in various products and services. So we'll talk about these, the value proposition, as well as um, finally also an analysis of the prevailing market outlook and how the Helix Transition Fund is strategically positioned with it. The fund is predicated on the fundamental understanding of the evolving relationship between human economies and the natural world, a concept that is central to the ecoeconomics thesis. The framework posits that economic systems are not independent entities, but are integral components of the Earth's larger ecosystem. Unlike traditional environmental economics, which often views the environment as an external factor to be managed, ecoeconomics emphasizes the intrinsic interdependence and co-evolution of these systems. When I say co-evolution, I mean is the the natural systems around us is also changing at the same time in which we are changing ourselves. Prioritizing preservation of natural capital as essential to the long-term economic stability. This uh, perspective recognizes that the planet's resources are limited, finite, and that environmental degradation carries significant economic cost, both now and for future generations. We can already see the cost that we kind of experienced already. Therefore, investments that are aligned with ecological sustainability are not merely ethical considerations, but represent a strategic imperative for building resilient and enduring economic value. The Helix Transition Fund strategically aligns its investment thesis and with the core tenets of the economics thesis. The fund is designed to invest in companies and sectors that are actively contributing to the transition towards a sustainable global economy, um, with a particular emphasis on the energy transition. This includes companies involved in the development and deployment of clean energy technologies, the sustainable management of natural resources, and the facilitation of a global shift towards more environmentally responsible practices. Fund may also draw insights from the Helix Transition Index. This is fundamentally our IP. Uh, it's a metric that is designed to assess how effectively companies are adapting to and and driving the transition towards a sustainable world. Considering factors um, such as their engagement with clean energy um, initiatives, adherence to various environmental regulations, etc. By centering its investment strategy on the energy transition, the Helix Transition Fund taps into a powerful and enduring global trend, one that is driven by the urgent need to address climate change and build a more sustainable future, thereby potentially leading to returns that exhibit a lower correlation with traditional market cycles that are often tied to less sustainable industries. Furthermore, the Helix Transition Fund recognizes that companies that proactively embrace sustainability and integrate environmental, social, and governance factors into their core business models are better positioned for long term competitive advantage. This increasing emphasis on not necessarily just the ESG ratings, but the ESG considerations as such. Honestly, I don't believe in the way ESG ratings are implemented. I believe more in its implementation in the company itself. Uh, ESG assets are projected to reach more than 50 trillion in the near future by the end of 2026, underscores the underlying recognition that sustainability is not just a societal benefit, but also a key driver of long-term financial performance. By focusing on companies with strong sustainability profiles, the Helix Transition Fund aims to identify investments that are not only contributing to a healthier planet, but are also more resilient to risks and better equipped to capitalize on the opportunities presented by the transition to a sustainable future, potentially leading to more stable and uncorrelated returns for our investors. Beyond the overarching framework of ecoeconomics, Helix Transition Fund strategy also recognizes and seeks to capitalize on the powerful influence of the aspirations gap. I think we spoke about the aspirations gap very briefly. In In the ecoeconomics context, the aspirations gap represents the difference between the current state of the world, particularly concerning sustainability and environmental well being, and the widespread desire for a better, more sustainable future. This gap acts as a significant motivator for future oriented behavior, including the adoption of sustainable practices and investments in solutions that can help realize these aspirations. These aspirations are increasingly shaped by a growing global awareness of environmental challenges, coupled with a desire for improved quality of life and a healthier planet. So, the Helix Transition Fund's investment strategy is designed to identify and capitalize on the significant opportunities that arise from pretty much the global aspirations gap in sustainability. The fund focuses on investing in sectors and innovations that directly cater to the evolving societal needs and preferences for a more sustainable world, including areas such as renewable energy, sustainable transportation, um, access to investments that are more sustainable, and the development of circular economy models. This includes companies involved in the development and deployment of electric vehicles, creation of energy efficient technologies, implementation of sustainable agricultural practices, all of which are driven by the collective aspiration for a cleaner and more sustainable future and a global economy. By aligning its investments with the growing demand for sustainability focused solutions, the fund aims to generate long term uncorrelated returns that are driven by fundamental shifts in consumer behavior, technological innovation, and supportive government policies. While acknowledging the concept of aspiration failure, where overly ambitious goals can lead to discouragement, the fund strategy prioritizes investments in solutions that are both impactful and have a clear and feasible pathway to widespread adoption and success. And that's one of the reasons why we are only looking at listed assets, listed stocks, ETFs, where uh, basically the company has achieved a certain level of scale and is able to grow its market adoption. The Helix Transition Fund employs a multifaceted investment strategy specifically designed to deliver returns that are uncorrelated with traditional equity and fixed income markets. Our approach is active and data driven, leveraging the insights derived from our, our proprietary um, trading signals. Um, Basically, the trading signals are derived out of our research um, to identify compelling investment opportunities within the energy transition and broader sustainability landscape. We focused on pinpointing specific market inefficiencies and unique situations within the evolving sector that exhibit return drivers distinct from those influencing the broader market. I'll talk about some of these as we go on. These include capitalizing on regulatory shifts, technological breakthroughs, or temporary market dislocations related to the transition. Our strategy is not confined to a single sector within the energy transition. Rather, we recognize that sustainability is broad based, impacts every sector, every geography, and every size of company. We maintain a flexible sector agnostic approach to maximize our ability to identify and invest in the most promising opportunities as they emerge across various industries undergoing sustainable transformation. This may include allocating capital to equities of companies at the forefront of the transition, providing um, you know various sustainable infrastructure projects. We are also involved. We've been working very closely with a European smart city developer in order to act as a strategic financial advisor um, for their infrastructure projects as they work with various um, local authorities around Europe. Furthermore, the fund may selectively employ strategies such as long and short positions. We have primarily one strategy that is live right now is equity long short in specific companies or commodities based on their transaction potential and market valuation, aiming to generate returns regardless of overall market direction. Um, the Helix Transition Fund strategy is designed for scalability. We recognize that the immense investment required to achieve a global transition is not going to come in one shot. It's going to come in over time. So the fund itself needs to scale in stages. So as the world continues to commit increasing capital to the sustainable solutions, the fund is positioned to scale its investments accordingly, deploying capital efficiency across a growing range of opportunities in areas where we see the eco leaders, um, the sort of eco adopters, and then we also have the eco laggards and some investments also into those companies that are essential to the energy transition but may not be ecologically sustainable at this particular point of time. The fund's operational framework and investment process are built to accommodate growth, allowing us to adapt our strategies and deploy capital efficiently and effectively as the fund expands. Feasibility is a core consideration in our investment approach. The Helix Transition Fund Strategy is grounded in sound economic principles and leverage. Well established investment methodology is applied within the specific context of the ecoeconomics thesis, which is characterized by increasing maturity and clear growth drivers. Our experienced fund management team possesses a deep understanding of the energy sector, the food sector, um, and completely from agriculture all the way through to retail and hospitality, the housing sector, all the way through from housing related services, other built environment that supports housing, technological advancements, industrials as well, industrials all the way through from energy to various industrial products and services, heavy engineering, which supports the other sectors, uh, and also transportation and logistics being a very core area. We also look at the intricacies of the financial markets and the way in which the financial markets are evolving and various new technological advancements that are coming in. So we invest into fintech. We also invest into educational technology, not really the edtech world of the past, but today edtech which supports large scale adoption and helps with the sustainable transformation, ensuring a practical and viable approach to achieving our investment objectives. Innovation is a key element in Helix Transition Fund strategy. We actively seek out unique and differentiated investment opportunities within the ecoeconomics theme, often focusing on emerging technologies, novel business models, and previously overlooked segments of the market. This innovative approach allows us to potentially identify and capitalize on high growth opportunities that may not be on the radar for more conventional investment strategies. So today we stand at a pivotal point where in 2024 the Helix Transition Fund delivered 84% uncorrelated returns. Um, During 2025 year to date, we've delivered 35% returns, while our benchmark S&P suffered about 20% um, you know drawdown in a single day. We now have a situation where our maximum drawdown is only about 4.13%. Ultimately, the Helix Transition Fund offers a compelling value proposition for investors seeking diversification and uncorrelated returns. In an environment where traditional asset classes are increasingly exhibiting correlation and facing heightened volatility, our focus on ecoeconomics presents a distinct source of potential returns. The long-term secular trend of the energy transition and the associated transition in food, industrials, transportation, housing, etc., provides a stable and growing investment landscape, offering the potential for consistent returns that are less susceptible to short-term market fluctuations. Moreover, you find that the companies that we select often have local supply chains, not really affected by supply chain disruptions. They have a very good community around their product or service, which means that they are able to increase market adoption without having to depend on various external players. They are at the forefront of various environmental and regulatory considerations. Often they're not at the receiving end of any regulatory changes. We also find that by investing in this critical area, our investors have the opportunity to align their capital with positive environmental as well as social impact, addressing the growing demand for sustainable investment options. While uh, there are opportunities for positive environmental and social impact, most of these opportunities lie in highly illiquid direct investments, which means that your capital is locked for 5 years or 10 years, often with a promise of lower than market returns. Here is the difference that Helix Transition Fund offers: uncorrelated, higher than market, highly liquid. So let's now look at some of the strategy categories and how we are looking at this. First of all, the various market perturbations. Looking at temporary price fluctuations due to supply and demand mismatches around various you know uh, yeah, take the case of basically the government bond auctions that take place, and basically looking at the temporary price fluctuations. Sector specific trades, inefficiencies in the power markets, inefficiencies, and basically dependence on weather, dependence on seasonal trends in the consumer markets. So we try to exploit these market inefficiencies. Uh, Equity market neutrality that we tend to maintain. So we are in the US, UK, and European markets. We select stocks across, um, pretty much outperforming stocks across these markets. So, uh, so even if one market goes down, we are still benefiting from cross-sectional dispersion rather than overall market direction. Um, we take a broad range of swing, positional, and long-term trades. So the long-term trades are the ones that are extremely aligned with the economics thesis. The positional trades are the medium ones where we can profit from a certain positional advantage at a certain time. Um, the short-term swing trades are more aligned to, I would say, either eco laggards those that or those companies that are um, essential to the energy transition, like fossil fuel companies, essential to the transition, but are not necessarily economics aligned. So we tend to take these opportunities, as the case might be, but only as swing trades at a certain point of time. We also take event-driven strategies. So this could be earnings calls, macro events at a specific time, merger announcements, companies that are going private. So we tend to take um, advantage of news that comes in, um, typically either swing or positional trades with respect to that. Um, we also look at infrastructure and then decide on whether to capitalize on various overlays of ETFs. So, so we take ETF overlays on the broad market. We take, across emerging markets. We take bond. We take treasury. We also take gold ETF overlays. So that kind of balances overlays on top of the core satellite strategy that we follow. So underlying core plus a number of satellite strategies plus the ETF overlays in order for us to kind of deliver uncorrelated returns. There are a number of intellectual property related investments. So in areas like EV, um, there is a heavy emphasis on intellectual property. So we tend to take those trades longer term, where we are able to capitalize on the move from from having intellectual property going towards or basically achieving um, market momentum. So income streams based on the usage and sales of intellectual property. We also take managed futures, meaning funds going long or short on certain commodities um, or currencies. So we take these overlays in order for us to capitalize on the directional trends. Uh, Looking at the current market momentum, so I'll talk through what we have been observing so far and how we have um, positioned ourselves. We anticipate continued market attention to the tariff scheme, whether those tariffs get implemented or it gets shelved completely. There's still going to be a lot of market anticipation on that. The our estimates for US GDP is about 1.6% decline this year. Um, so it could amplify into other major markets as well. So US recession can typically also amplify, and it can ricochet into UK and Europe. So that is something to be watchful of, and that's one of the reasons why we are closely watching both the interest rate and monetary policy related moves, as well as looking at the broad momentum in the market as such. While there are signs of economic activity slowing down, particularly contraction in first quarter GDP, uh, persistent inflation concerns stemming in part from the ongoing tariff policies, um, this is likely to keep the Fed on hold with interest rates. But this cautious approach from the central bank uh, also needs to be looked at in the context of trader momentum that we see pretty much day on day. Over the last 1 month, what we have seen is that many of the institutional um, allocators um, are on the selling end of the market, while most of the buying activity has been in retail brokerages, um, executing smaller orders for their retail clients or for small investors. So over the last 1 month, we have seen many institutional block trades going on the red, meaning they are selling in large quantities, whereas a large number of smaller retail brokerages executing trades for their individual customers or for block set of retail customers who are trying to buy the dip, right? So is the dip really there? That is the question that I tend to ask. With uh, equity valuation still on the higher side, um, we find that we are trying to navigate the dual pressures of inflation and potential economic weakness, both highlighting complex market dynamics as we go. So, uh, several key earnings releases that took place over the last um, month or so have contributed um, to swing trades that we have taken, certain positional trades that we took, during the last month. Um, Several key economic releases this week will also provide important insights to the performance and outlook. Um, there is, Ford's earnings support that's coming in. We also find, Palantir coming up with its earnings. We are closely watching the trades with respect to these. We find that our our focus on earnings related momentum at points tends to add anywhere between 1 to 2% in uncorrelated returns at any point in time. So this can pretty much offer some more momentum as we see. The broader context of global trade related tensions with the potential for further escalations or de escalations gives opportunity for more market uncertainty and volatility. So as we always say, volume and volatility are our friends. So we try and embrace that. We try and use volume and volatility to our advantage. So whenever these erratic moves take place, it presents an opportunity to generate uncorrelated returns. In this environment of policy shifts and economic uncertainty, the Helix Transition Fund is strategically positioned to pursue its objective of delivering uncorrelated returns. Our focus on the long-term secular trends in the energy transition and ecoeconomics related thesis, coupled with our active management, data-driven investment approach, offering high liquidity for the investors and uncorrelated returns as a benefit. It positions Helix Transition Fund at a level where other larger players are yet to catch up. Um, we will continue to focus on areas within the ecoeconomics thesis that exhibit strong fundamentals and growth potential regardless of the immediate market headwinds. So, so if you'll see, unlike other authors who write a book based on their thesis, I've written a book and I publish research very frequently on this newsletter and on LinkedIn. And unlike those that publish research on their Substack or maybe offer a research subscription, we are investing in those research insights and we are delivering returns for our investors as well. So so we've got skin in the game uh, directly all through from identifying the thesis, writing about the research, the companies that we identify, etc., and investing in them. So essentially, we are driving a car with a glass hood. So you can see the insides of it. You can understand how this works very easily by buying the book, by reading our newsletter, etc. You can see how things are working with us. In conclusion, the Helix Transition Fund offers a compelling investment strategy for today's market. It is well positioned uh, for sophisticated investors, professional investors, and also qualified institutional buyers who are looking at ESG, investing into ESG, but at the same time also have a need for uncorrelated returns. By aligning with the fundamental principles of economics, capitalizing on the powerful aspirations for a sustainable future, we aim to generate consistent returns that are uncorrelated with the market, with the traditional asset classes. Our fund's scalability, feasibility, and the innovative approach combined with a strong value proposition focused on diversification and long-term growth position it as an attractive option for investors seeking to navigate the complexities of the current market and to contribute to a more sustainable world. We encourage you to reach out to us either using my LinkedIn or directly on our website, or you can ping me here on Substack. Um, we are also running a session on the 11th of May where we'll be talking about how we generate these uncorrelated returns and how we are navigating the market volatility. Furthermore, we will be running these information sessions every Tuesday at 11 a.m. UK time. So please join us in future as well to understand how things are going. If you'd like to discuss an investment and or if you might need tax advice or accounting related help, we can put you in touch with one of our network partners who can help either from a financial advice, tax, or accounting related help as well. And happy to take up any questions. You can write your questions on the chat and I can answer them as we go along. Thank you. Thanks for joining in. there are no questions at the moment, we can close this live session as of now. But please feel free to ping me on the chat or on email, as the case might be. Thank you.